Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Man Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star followed by 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Good evening, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of Man Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and financial year ended 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainty, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place undue reliance on this forward-looking statement in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Ramesh Mansukhani, Chairman, Mr. Nikhil Mansukhani, Managing Director, and Mr. Ashok Gupta, Chief Financial Officer, along with Mr. Rahul Rawat, the Company Secretary. Without any further delay, I now hand over the call to Mr. Nikhil Mansukhani for his opening remarks. Over to you, sir.
Thank you. Thank you, Purvangi. Good evening, everyone, and welcome to the company's earnings conference call for the fourth quarter and financial year ended 2023. Let me begin by giving you a brief of the consolidated financial performance for the quarter. Our revenue from operations stood at 598 crores, representing a degrowth of around 2.6% year on year. Our EBITDA stood at 41 crores, with EBITDA margins reported at 6.86%. Net profit stood at 26 crores, while PAT margins were 4.37%. Coming to a consolidated financial performance for the year ended 2023, we reported revenue from operations of rupees 2,231 crores, which increased by about 4.3% year on year. Our EBITDA stood at about 137 crores, with EBITDA margins at 6.15%. We reported a net profit of 68 crores with a PAT margin of 3.05%. On the operational front, the unexecuted order book as on date stands at around 2,300 crores to be executed in the next 6 to 8 months. We continue to have outstanding bids for more than 15,000 crores at various stages of evaluation from several oil, gas, water projects in India and abroad, which sets our expectancy for good order book inflows. During Q4 23, we successfully ventured into the ERW pipes business as planned. We inaugurated our first plant in Anjar, Gujarat, dedicated to manufacturing ERW API grade line pipes to cater to the hydrocarbon and the CGD sectors. We are witnessing multiple triggers and good inquiries for our projects and are actively participating in the tendering process. Lastly, to give you a brief on the industry scenario, at present there are about 17,000 kilometer long natural gas pipeline network which is operational in the country. In order to make natural gas available across the country, it has been envisaged to develop an additional 15,500 kilometers pipeline to complete the national gas grid, and same are at various stages of development. City gas distribution network has taken massive strides to offer convenient and affordable fuel. From just 66 districts in 2014, the CGD network covers 630 districts in 2023, taking the number of domestic PNG connections from merely 25.4 lakhs in 2014 to a whopping 1 crores currently. The global onshore oil and gas pipeline market size is estimated to around 4.8 billion in 2023, and it's forecast to be readjusted to around 5.4 billion by 2028. During the forecast period 23 to 2028, the global oil and gas market grew from $6,989 billion in 2022 to $73.3 billion in 2023 at a compound annual growth of CAGR 4.9%. With that, I conclude my opening statement, and we can now open the floor for the question and answer sessions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yeah, you are.
Yeah. So can you give me the revenue split between, public sector and private sector for our, last year's revenue, as well as of order book that we are having, which we are likely to execute in 6 to 8 months, as you mentioned?
Yeah, good evening, Mr. Nitin. The exact quantification this moment is not possible. For most of the clients are PSU as well as the export, and the separate figure this time not possible. With regard to your second question, what is the order position? The order position is roughly 2,300 crore left out to be produced in next 6-7 months to complete it, and around 15,000 crore bid is pending, which we have good hope to materialize in our favor, good quantity. To get the this year growth, will be expecting around 50% top line, as well as to the great jump will be in the bottom line in this current year. For most of the orders, this moment is roughly 80% is export, and the 20% roughly is a domestic market.
So this 80% export that we are talking about is for 2,300 crore or for the that we have put in?
No, export was what we have in 2,300 crore, 80% would be exports.
No, sorry, your voice was cracking. Can you please repeat?
Out of the total order book of 2,300 crores, 80% is exports.
Got it. And the 50%, growth that we are talking about in the top line, how much is going to come from export? Again, 80% in the same range, or will we have more domestic orders coming in out of that 15,000 crore bids that we have put in?
Current year, our basic thrust is on the export.
Yeah. Okay. And do we... Sorry, go ahead.
Now, the most of the order from the export, this combination will work out the current year, approximately 70 to 80% export, and 25 to 30% will be domestic for this time composition. This composition may change in future also, but because we have the good bid book position in domestic market as well as to international market, the both markets will be there. Mostly the export during this year.
Thank you. Mr. Dharmawat, may we request that you return to the question queue for follow-up questions. The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. So first question is on this order book, 1,300 crore. Is it like evenly distributed, like we will be doing close to say 300 crore per month, or like it is some 1 month maybe very high, or how should we look at that?
Because all the flow we agree on the next 8 months.
Sorry, again.
This order book of 2,300 crores is going to be executed in next 6 to 8 months time. Hello.
Hello.
Ankur, can you hear us?
Yes, sir.
Yeah, we said this particular order book, which is in hand, should be executed in the next 6 to 8 months.
सर मैं पूछ रहा था कि ये मंथली मतलब 300 करोड़ के आसपास होता रहेगा या कोई एक मंथ लाइक 700-800 टाइप हो जाएगा या इवनली डिस्ट्रीब्यूट होगा ये?
पर मोस्टली डिस्ट्रीब्यूटेड ही होता है ओवर द नेक्स्ट 6 to 8 months। कभी का स्टील जो आता है अगर हम जब इंपोर्ट करते हैं तो उसमें थोड़ा टाइमलाइन लगता है, तो बट मोर और लेस इट शुड बी डिस्ट्रीब्यूटेड ओवर द नेक्स्ट 6 to 8 months।
So like April में we had close to that 300 crore types।
क्या होता है कि जब ऑर्डर आता है तो उस दिन से तो मैं प्रोडक्शन नहीं चालू करता हूँ ना सर, तो मेरे को अगर 2 महीना लगता है स्टील आने में कहीं से भी, तो उसके बाद देन द प्रोडक्शन स्टार्ट and then it goes on average for the next 6 months you will get a pretty much consistent output।
Got it। And sir हमारा बैलेंस शीट में इन्वेंट्री काफी रिड्यूस हुआ है बट ऑर्डर बुक इतनी अच्छी है, तो why has inventory reduced so much in the balance sheet?
See, all the new orders we received in the back end of the financial year. All new orders were flown in the month of March. So by the time we close our year, we have placed the orders for raw material in the current financial year. So that will be reflected in the current financial year.
Thank you. Mr. Kumar, may we request that you return to the question queue for follow-up questions. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Kaushik from VK Investments. Please go ahead.
Hi sir, good evening. I have a couple of questions. First is related to the borrowings. I see there is been shot up in the short term and the long term. Could you speak about this? Is it related to the stainless steel capex?
No, this long-term capex has happened for our ERW project, which has already been commissioned in the month of March 2023. And short-term borrowings basically it is utilization of working capital limits. As regards short-term working capital, it is around 170 crores. You can see the corresponding cash balance available in our books in the form of some cash margin given for utilization of NFB limits.
Okay. So long-term capital, long-term borrowings we have taken, right? But we have commissioned. So why we have taken again?
See, this loan has been taken for ERW project. Now the project is now commissioned. Once it will be repaid as per the repayment schedule once the project gets start generating revenues.
Okay. Okay. And I see there is a sharp reduction in the trade payables, which is roughly around 300 to 350 odd crores.
Balance sheet in totality, our receivables has reduced, our inventory has reduced. Simultaneously, on other side, our payables are also reduced.
Okay, okay. But there has to be, since we have a lot of order book, we generally see that it should be short up in the payables, right?
Come again?
If we have like 2,300 crores of order book that has to be executed in 6 to 8 months, why there has not been short up in the payables then?
See, now the orders have just been received now, and we have not yet started receiving the supplies. So once the material, we have opened the letter of credit and the materials are in the process of receiving. So you can see the jump. You may see the jump in this first quarter end in the inventory levels.
Thank you. Mr. Kaushik, may we request that you return to the question queue for follow-up questions. The next question is from the line of Bharat from Moneybee Investment Advisors. Please go ahead.
Hi, am I audible?
Yeah.
So my first question is, do you have some kind of target in terms of gross margin before you get into some contracts?
These are the export orders, and
Yeah.
These are the export orders, mostly export orders, and the margin of profit, because of this time we got some value-added products. So our EBITDA will be much better than the last year, which we closed recently, and the future order book, good EBITDA, softening of our raw material, which is going to greatly help to the company. So we expected to has a good growth in the top line as well as the bottom line.
So, sir, what is the EBITDA per ton that you get as of now? If you could just...
Not per ton, I can't say per ton, but EBITDA between around roughly should be between 10 to 11%. Whatever last year was less because of the foreign exchange hit last year. So this year we will get some much better results that is going to impact the bottom line in the positive manner.
Okay. What is the current capacity utilization in ELSA, HSA and ERW? ERW would be less, but then in terms of ELSA and HSA?
So ELSA and HSA right now around 50% to 60%.
And ELSA, HSA both 50-60%, around 50 to 60%?
Yeah. Both put together 50 to 60%.
So you would be able to cater to the existing order book with this current capacity utilization, and would you have to increase the capacity?
We are capable to do more, so we are already bidding for some orders
with the
existing line.
With the capacity utilization of 50-60%, we are aiming our existing order book to complete by December.
Okay. So how much time does it take to ramp up the capacity? And at optimum utilization, what is the revenue that you see?
We can go up to between 4 to 4,500 crores at a 70-75% efficiency.
In our industry, 60 to 70% utilization is a very great capacity utilization.
Okay.
Because of the good order book position, we will be much more going to achieve greater achievements as well as more orders. There will be good capacity utilization in this year as well as the coming time.
So one more question. The bid pipeline that you said, which is 15,000 crores. So can you just tell me what is the success ratio or the conversion ratio that you see?
It is between Bharat. So basically the bids, we normally tend to get between 15 to 20% conversion.
Okay. So this 15,000 crores bid pipeline is through is over 2 to 3 years, or what is the timeline of these bids?
Basically, it's between next 18 months.
Okay.
If everything goes well, a lot of the bids come, but then it gets postponed. It takes more time. But most of the bids, the genuine and the serious bids, get done between 12 to 15 to 16 months maximum.
Thank you. Mr. Bharat, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Aman Thadani from Solidarity Investment Managers. Please go ahead. Mr. Thadani, your line is in talk mode. Please go ahead with your question. Mr. Thadani, please unmute your line from your side if muted. Mr. Thadani, please unmute your line. Yes, sir, please go ahead with your question.
Hello.
Yeah, Aman, we can hear you.
Yes, sir. Sir, thank you for taking my question. Sir, my first question is on Merino shelters. Sir, what is the settlement status with Piramal, and what is the total amount that is pending from our end?
So, the Merino shelters is already being settled. Piramal is already being paid, and we've already released all the charge of the property, everything. So it is now free of charge. Everything belongs 100% to us.
Okay. And sir, this amount, was this paid through Merino's book, or was it paid through Man's standalone books?
From the main standalone books.
Okay. And sir, my follow-up question is, sir, what do we plan to do with this land?
No, we are already in talks to sell it, and hopefully we are not going to develop it, and we've already got bids for selling it. So hopefully very soon we will do an agreement and do an outright sale of the particular land.
Okay. Sir, my second question is on the SEBI forensic audit. So in the last Concall, you said that we have filed a settlement with SEBI and they will reach out to us in like 2-3 months. So have they gotten back to us?
No, it's still pending. We have filed it. It is still pending.
Settlement application has already been filed. We are also waiting for that final outcome of the settlement.
Okay. And so my next question is on the performance, sir. In the fourth quarter of FY23, we saw the other expense increase by 15%. So what were the key line items because of which we saw such a drastic increase in the other expenses?
See, during this quarter, basically we got some order for job work order we have received, and whatever job charges got paid about 20 crores, that got debited to the other expenses.
Okay. So then, how should we look at the EBITDA margins? Because the EBITDA at in Q4 were around 7%. So and we guide for some 10 to 11% EBITDA margin in the SAW business. So how should we look at the EBITDA margins going ahead?
So EBITDA margin between 9 to 11%.
Anil, Mr. Thagani, as I already indicated, last year EBITDA gone down because of the foreign exchange 1 quarter loss. You are aware. Now the EBITDA we are anticipating much higher this year, 10 to 11%, because we got some value-added products, other things, and all will be done at our campus, and the better value addition, better value EBITDA, better top line and bottom line. So it is going to improve drastically in next 3-4 quarters.
Thank you. Mr. Tharani, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Ankur Agrawal from RC Wealth Solutions. Please go ahead.
Hello.
Yes, Ankur.
Hello. Yeah, I'm audible?
Yeah.
Sir, what are your projections for next 2-3 years, like how much in sale and profits?
So we are looking at top line between growth of at least 20 to 30%. Like our chairman said, this year is exceptionally good. We are doing almost 50% growth. But on a consistent rate, we are looking at a growth of almost 15 to 20% growth for the next 5 years.
And margin will be at 11%, 10-11%, or so low, like 6-7%?
We are targeting 10-11%. And actual EBITDA margin depends on when we take the orders, depends on our the availability of the manufacturing facility. If we have spare capacity, then we may go somewhat on a lower margin. But if the plant is already overloaded with the execution of orders, then we may go aggressive on the pricing front.
Raw material up and down may cause some margin pressure, or it will be hedged by anything like that?
We generally cover our raw material requirement, 80% requirement back to back. Once we receive the order, we place the order for raw material.
How much the cost of the real estate of Merino shelter? What do you think?
Around 150 to 170 crores.
Okay. Thank you. That's all from my side.
Thank you. The next question is from the line of Mukul Jain, an individual investor. Please go ahead.
Hello, sir. Just wanted to add on so this which started.
When your audio is breaking, please check, sir.
Am I audible now? Hello?
Yeah, you are.
Yeah, sir. I wanted to know about ERW. So, already you have started the plan. So, what order you have received yet from the current order book? Is there any order which you have received?
So, Mr. Mukul, we've just started the ERW. We are still working on the certifications of API and everything, which takes a little bit of time. It's already been filed. But we've got some small orders for 2,000-3,000 tons, which we are already doing. And I think the certifications will come in the next couple of months. Then the mill quantity and the business of ERW will pick up.
The latter will be
Okay, so you expect from Q2 to be completely utilized? What expectation you have for the utilization going forward?
Q3 and Q4 should be better, and will get more and more stabilized because it is just started. So Q3, Q4, we are not very optimistic, but we are working towards doing the best currently because it's a brand new plant, and we will keep you all posted every quarter on how it's progressing. But we are very hopeful that from next year there are a lot of orders in pipeline, so we'll be able to get certain portion of the pie for us.
Okay, so just last question, any guidance on EBITDA margin from you? Because what I believe so in EPSA is a bit lesser margin.
Sorry to interrupt you. The audio is breaking from your line, sir. Please repeat your question.
Sir, can you guide on EBITDA margin from the ERW business?
EBITDA margins will be on the similar levels of 10 to 11%. And we are looking at a top line of ERW this year would be between 200 to 300 crores.
Okay, sir. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for taking my question one more time. So, sir, what is the raw material trend that we see? Is there any pressure on raw material now, or has it come down?
It has come down now in the last couple of months. The trend is of steel is it's coming down. It's softening up.
Okay. Got it, sir. Yeah, thank you, and wishing you the best.
Thank you.
Thank you. The next question is from the line of Kaushik from VK Investment. Please go ahead.
Yeah, thank you for taking my follow-up. Sir, I have a question on the ERW business. Could you talk about more the business, because I see there has been a fluctuating margin in the ERW pipe. So what kind of plan do we have? Could you explain how you are saying that it will be stable margin 10 to 12%? I want to understand more on that.
So ERW API business normally tends to the business is on the same lines of the pipe, and the margins and the customers are also similar with your GAIL, HPCL, IOCL, BPCL, and the CDG clients. The EBITDA margins with I think most of the players if you see is between 9 to 11%. Yeah, there is another line of business which is other than API, which is the IS grade work, which is a little bit lesser margin, but more on the turnover basis. But as we've installed this as an API line, a premium 18-meter API line, so we will be focusing more on this and exports to get better margins.
Okay. On the stainless steel pipe that we are incurring next year, and how much capex it will be, and will we start with commission? It will be coming in next year, or the work has been started on the capex?
You're talking about stainless steel?
Yeah.
The stainless steel, the investment is around 550 crores. The work is already started, and we should be in operation by December 2024.
December 2024, that is this. And the order book, how do we do? We clearly get the orders, or it will be like same ERW that we commission, then we wait for the order book to pile up?
Commissioning is by September, October, so we should be in a position to start getting orders by December 2024.
Okay, sir. Thank you. All the best.
Thank you. The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Sir, question on the total debt. So what our total debt closed is, how much is the total amount right now, and what will our peak debt be?
During the current financial for FY22-23, my long-term debt is around 135 crore. Short-term borrowing is 170 crore. And taking into the implementation of our stainless steel project, the peak long-term debt in the book would be around 400 crore by 24-25.
Okay, and working capital would increase in similar proportion.
Yes.
Okay. And sir, on margin side, you are saying 10 to 11%, but have we booked raw material? And you are also saying that we generally book 80% of raw material. So on this 2,300 crore order book, have we already booked our raw material that we are confident of this double-digit margins?
Yes. 80%, more than 80% of the raw material has already been booked.
Got it. And sir, on depreciation, what kind of depreciation number we expect as in terms of increasing because we are increasing on new capacity?
This year would be around 60 crores, 60 to 65.
Got it.
And going forward, around, and after the SS expansion done would be around 100 crores.
Okay, sir. And our interest rate would be?
Sorry, that is a different company. We should not don't get them mix it, please.
In the consolidated depreciation, I mean.
No, okay, so consolidated is just separate thing.
Yeah. Consolidated depreciation. Mr. Ankur, what was your question?
I was asking about the interest rate which we'll be paying.
Interest is between 9 to 10%.
Got it, sir. Thank you.
Thank you. The next question is from the line of Aman Tharani from Solidarity Investment Managers. Please go ahead.
Yeah, Aman.
Mr. Tharani, we are not able to hear you, sir. Please unmute your mic if muted. If there is no response from the current participant, we'll move on to the next question from the line of Bharat from Moneybee Investment Advisors. Please go ahead.
Hi, am I audible?
Yeah.
So this 2,000 crore order book that you have, so can you just tell me how much is it in volume terms?
Around 250,000 tons.
250,000. So my another question is, I guess you import 70% of the raw material. So how much do you hedge against it? I'm sorry if I'm repeating the question.
Age?
Yeah.
As I told you, we generally book steel back to back. We place immediately at least 80 to 90% steel we book back to back basis.
Okay. That's it from me.
Thank you. The next question is from the line of Manish Gupta from Solidarity. Please go ahead.
Thank you for the opportunity. I have 5 questions. My first question is that in Q3 we had the adverse impact of the FX loss. In Q4 the EBITDA is 6%, while we tend to guide for 10 to 11% steady state EBITDA. So why would the EBITDA margin in Q4 6% and not close to 10? That's the first question.
So, Manish, major of the orders done in Q4 were of oil and gas. And also one more thing in Q4, the market trend of the uncovered steel also of the 10-15%, the market of steel ran up from January and went to the peak again in March, and then it started coming down. So that also had a certain impact on us on the last quarter. So that is the reason, one of the reasons that our EBITDA was in that quarter. And the overall EBITDA also was down. The EBITDA hit in the quarter was around 1% due to all these things. And the overall hit in EBITDA from last year was around 2%, which we were on track. That 2% was because of our forex loss.
Sorry, Nikhil, just to follow up on this one. I'm saying if we had a 1% impact because of the unhedged steel running up, then shouldn't the EBITDA have been somewhere in the range of 9? What explains the difference between 9 and 6? Because my understanding is the FX loss
is 7.5%.
Okay.
If you see the EBITDA quarter is 7.5%.
Okay.
And we were on track. Like we said, we had some orders of that particular quarter we were executing for water as well. So water generally runs into a lower EBITDA. So that is why. But also the impact of the steel suddenly running up also impacted around 0.5% or to 1%. So that is why we would not get our 9.5%, which was expected on that quarter.
Okay.
And
great.
for the year, like we said, the reason for the 2.5% loss was on the EBITDA was because of our forex loss.
Okay, great. My second question is that now for this 2,300 crore order book, a lot of this is export order. Are you hedging your, you import steel, but these are export orders. So what's the decision on, have you decided to hedge the export? How are we preventing the repeat of Q3 because of the FX mismatch?
The repeat of Q3 was because last year we had only 10% export orders, so we did not have the natural hedge position. Compared to this year, we already have 80% of exports, so we have naturally hedged. Whatever the portion of the export, we've already hedged all of it. So that what happened last year will definitely not happen this year again.
Okay, great. My third question is, Nikhil, that you're saying it's a 2,300 crore order book, it's export oriented, you have a natural hedge. You're saying 6 to 8 months for execution. So if we assume, I'm just taking a broad number, if we take say about 2,000 crore execution in the next 6 months, you're guiding for about I think roughly you said 50% growth, so say broadly 3,200 crore for the year. Do you think we could do, are you therefore saying that we could do almost 320 to 350 crore EBITDA for the full year, FY24?
Yeah, so our target is EBITDA of around 300 crores and we should be hitting the target this year.
Okay.
With the current order book and the bid which we are at L1 positions, our estimation is to hit exactly 300 crores of EBITDA in this year.
Okay. My fourth question was on Merino. I think, you made a very clear statement on the call that you're not going to develop the project. You intend to sell it. By when do you target sale and cash in the company?
We've already got a couple of offers and the approximately timeline would be total timeline because anyone who's coming is the payment terms are within 3 to 6 months. But I think we will close this transaction in the next 3 months, and the first tranche of payment should be within the next 3 months as well.
So by June end, we should get some money in, you said?
Not June end. We are in May, around July.
Okay, great. My last question, 2 more questions. Second last question is, I thought I heard you say, Nikhil, 15 to 20% CAGR. Now, that's a very, very aggressive guidance that you are giving. I mean, can you talk a little bit about it in a bit more granularity about what gives you the confidence for such an aggressive guidance? Because, the company is actually not grown for almost a decade now.
Yes, correct. Absolutely. So why that guideline is that because currently we are at around 2,100 crores. If we are saying that a 20% growth into 5 years, that means we should be at a 4,200 crore top line in the next 5 years. Now, why I'm confident in saying that is, the reason is that today we are already from the existing lines, we are expecting to touch between 2,800 to 3,000 crores of top line, which we can consistently do that. Other than that, we are expecting between 700 to 1,000 crore top line from ERW, which is it's at a nascent state of production, but it will pick in from next year. Actually, 2 quarters down the line, it will start really moving, and then probably next year it will start kicking in more and more into the top line. So even if I'm saying 500 crores top line coming in from ERW, suppose next year, and then our SS and value-added products, which is our bending, our connectors, and other businesses. So we are very confident that we'll be able to go to approximately 4,200 crores because our SS we are assuming December 24 as the starting of the production full-fledgedly and getting orders, and that can go up to between 800 to 1,000 crores of top line as well. So in the next 4 years, we should be comfortably at a 4,000 to 4,002 crore top line, which is from the current existing year which is finished at 20% CAGR. That's why.
So, Nikhil, what can go wrong here? Because, the implicit assumption is that we can sell all this capacity.
So I'll tell you, Manish, the point in this is we are not assuming any of the production at 100%. Even as a ERW, like I said, we are only targeting 200 crores for this year, 350 crores for next year, whereas it can go up to 1,000 crores. So we are expecting 30% production as we are 30% sales of the top line, what it can achieve, is because it's a newer business. We are just getting into it. We will, slowly develop the business. Same goes for SS. It's a new line of business, though we have studied it and we are getting into it, but it will take time. But even keeping that in mind, and like I said, I am only counting 20, 30, and 40% ramping up of those new businesses in the next 3 years. Still, my existing business, which is Man Industries, is a good business of 2,500 to 3,000 crores, even more on a good year. So keeping that as a constant and keeping the new businesses which are coming in, I do not see any issues in achieving the 20% growth for the company.
Thank you. Mr. Gupta, may we return to the question queue for follow-up questions. We'll take the next question from the line of Ankur Agarwal from RC Wealth Solutions. Please go ahead.
सर क्वेश्चन है, जैसे आप कह रहे हो इस साल हम 3200 करोड़ का टॉप लाइन करेंगे, तो इसका तो आगे जाके ग्रोथ स्लो डाउन हो जाएगी, 10% के आसपास ईयरली ग्रोथ रहेगी, क्योंकि आप 5 साल में कह रहे हो 4200 करोड़ का सेल करेंगे, इस साल 3200 का सेल करेंगे.
ये सर आज के साल से मैं आपको बोल रहा हूँ कि फ्रॉम नाउ ऑनवर्ड्स, मतलब ये साल हमने जो 2100 करोड़ किया है अप्रोक्सीमेट, वहाँ से 20% एज अ ग्रोथ पोर्शन आई एम सेइंग. जिस साल अगर हम 3000 करोड़ कर रहे हैं, तो मतलब क्या है कि वी आर गोइंग टू टेक इट फ्रॉम देयर ओनली. आई एम गिविंग एज अ कंजर्वेटिव नंबर के इवन इफ वी से ओनली 20% ग्रोथ फ्रॉम ईयर ऑन, वी आर गोइंग टू डू अराउंड 100% ग्रोथ रिटर्न इन 5 years is on the conservative line, which we can 100% achieve through all our other businesses which we are expanding in.
सर डिविडेंड पॉलिसी क्या है कंपनी की, कुछ बताएंगे?
पॉलिसी
डिविडेंड
I can't get
dividend.
Board of Directors will decide it now.
Hello.
As a dividend is subject. The board of directors will take the decision.
इस साल डिविडेंड डिक्लेयर नहीं करेंगे कोई?
सर मैं अभी आपको बोल नहीं सकता हूँ, पर अभी ऐसे ही वी आर वेरी बुलिश एंड यू विल गेट सम न्यूज. लेट्स द टाइम कम. The next board of directors will take the decision about the dividend distribution. We are not saying no.
कोई फिक्स पॉलिसी नहीं ऐसे कंपनी की होती है कि प्रॉफिट का 10% डिविडेंड डिक्लेयर करें?
सर हाँ, वो पॉलिसी है, पर वी आर इन द एक्सपोजिशन. यू विल गेट सम गुड न्यूज. अभी एक्सपेंशन, ये कैपेक्स, द लॉट ऑफ प्रोग्राम्स गोइंग ऑन एंड द डिविडेंड आल्सो वन ऑफ द एजेंडा. वी विल पुट इन द नेक्स्ट बोर्ड मीटिंग एंड लेट देम टेक द डिसीजन. Then inform me, sir.
Oh, thank you.
Thank you. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah, thank you for all participants in this earnings call. I hope we were able to answer your questions satisfactorily and the same.
There are more than 20 parties in the conference.
Please go ahead, sir.
If you have any further question or would like to know more about the company, please reach out either our company secretary or our investor relations manager, Mr. Veloram Advisors. Thank you, Mr. Safe and Mr. Healthy. Thanks a lot, sir, for your presence and your patience.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of Man Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.